everyone, and welcome to Karora Resources Live Investment Summit today, hosted by Six. I'm joined today by Oliver Turner, their Executive Vice President of Corporate Development. Oliver's going to walk us through a company presentation, and after we'll move on to the live Q&A session. I'd like to remind everyone in the audience that you can ask questions using the Q&A tab found on the right-hand side of your screen. Without further ado, Oliver, I'd like to hand things over to you. Get us kicked off.
Yeah, thank you very much, and hello everyone. Good to get back on the Six platform. I know it's been a while since we've been on here, so excited to give you an update with a fresh look on our new deck here. We've certainly been very busy since we last talked on Six, so I'll walk you through some of those updates, and of course we'll have some questions at the end of the session that we can run through. So with that, I'll kick it off, and I'll try to balance it between for new investors as well as obviously our great existing shareholder base. So Karora, in sort of 5 points here is a growing gold producer in a tier 1 jurisdiction. We are in Western Australia. I'll talk more about that position a little bit later on. We are ramping towards a production rate of approximately 200,000 ounces by 2024. I'll talk about how we're doing that. Very excitingly, we recently announced the results of a nickel PEA. So we're going to be expanding some nickel production at our Beta Hunt mine, which has a long history of nickel production, backed by a management team that's certainly done this before in terms of acquiring and scaling assets. And we have a very new and exciting COO that's joining us as well. I'll talk about Bevan shortly. And of course, we take our climate action plan very seriously, which is a differentiator for a whole range of investors in the current environment. And last year, we were the first carbon neutral junior gold producer in the world, which is fantastic. And we've done some great work moving that forward over the course of this year, and more to that to be announced later this year. So I'll draw everyone's attention to the standard disclaimers and forward-looking statements. You can read those on your own time. But let's jump right into the asset base. So as I mentioned, we are located in Western Australia, just south of Kalgoorlie, which is the most prolific area for gold mining in Australia. No stranger to gold mining. It's happened for several hundred years there. Our assets, Beta Hunt and Higginsville, are located just south of Kalgoorlie. Beta Hunt's about 60 kilometers by road. That's our primary asset, and the majority of our production comes from there. It's an underground gold and soon to be again nickel mine. We also have the Higginsville properties, which cover over 1,800 square kilometers. In fact, the total land package is 1,900 square kilometers, as you can see on this slide there. That's where we have our Higginsville mill, 1.6 million tons per annum. We also have the Spargos open pit mine, which we're mining and expecting a great quarter out of in the third quarter here. And then, of course, the Lakewood Mill, which we recently acquired as part of our expansion plan. All of this comes together in a fantastic package. And in fact, that land covering is the largest land package in the Kalgoorlie belt. That's even larger than Goldfields. So a tremendous exploration upside. It was capped by royalties for a very long time. We are now unhandcuffed by those royalties and wide open for exploration, which we invest in heavily every single year. So let's step into the management team. Most people will be familiar with Paul Hewitt on the left, the chairman and CEO of the company. Built and scaled Klondex from a single asset, development asset, into a producer, tucked in a mill, and then of course several assets in Nevada. Eventually sold it to Hecla Mining. Very strong track record there, and has been doing the same thing alongside our management team here at Karora. Our newest addition to the team is Bevan Jones. He'll be starting very shortly here. We are thrilled to have Bevan. He's going to be our Chief Operating Officer in Australia. And Bevan comes from the St. Ives Gold Camp, which is literally over the fence from Beta Hunt. In fact, Beta Hunt is a sublease on the Goldfields property there. Bevan has a long history in the area, is very well respected, comes with a massive network. So we're super excited to have him join our team. St. Ives is a camp that's produced over 16 million ounces historically. Bevan's time there has been very productive. He's increased output as well as significantly reduced all-in sustaining costs and all-in costs there at St. Ives. So we're thrilled to have him there, and have him hop over the fence to our side of things. Graham Sloan, who was our MD of Australia previously, has stepped into a very well-deserved retirement. We wish him well in his retirement, but also Karora shareholders will be extremely happy to know that we'll benefit from Graham's strategic input over time. He has agreed to join us as an advisor, and of course we'll be benefiting from his experience in a variety of areas as we move forward. So welcome to Bevan, and congrats to Graham Sloan on his well-deserved retirement. The remainder of the management team, myself on the left, background in mining engineering and ultimately mining capital markets. Barry Dahl, that is our CFO. He was prior to joining us as the CFO of Karora. He was the CFO of Excelsior and, of course, the CFO of Klondex Mines. It was a big part of the success there. Mike Doolin, who's our SVP of Technical Services, is a mill expert, but ultimately an operational expert. Has a variety of experience across the C-suite, and of course was the COO of Klondex and a big driver of their success operationally when they were scaling their operations in Nevada. So strong management team, and we've been delivering a strong track record of success so far. Let's jump right into one of our most recent events with the Lakewood Mill acquisition. So earlier this year, we announced the acquisition of the 1 million ton per annum Lakewood Mill, which is located just north of the Beta Hunt operation. This is a fantastic mill that was run by a private operator in excellent condition, and was one of 3 mills that we were tracking over a period of time, certainly our preferred option. We acquired it for $80 million Australian, $70 million Australian in cash, and 10 million Australian in shares. We closed that in July, so we've only had the keys of the mill for a few weeks. As I mentioned, approximately 1 million ton per annum capacity. It is actually 20 kilometers closer to Beta Hunt than our Higginsville mill, which obviously from a hauling cost perspective will actually lower our costs of processing Beta Hunt material, which is tremendous. And then in the first quarter, we actually toll milled some of our Beta Hunt material through Lakewood. Now, we did that for a variety of reasons. Obviously, during the first quarter, we couldn't disclose that we were conducting our due diligence on Lakewood. We're very interested in acquiring it. And one of the ideas that our milling group, led by Mike and Dennis over in Australia, came up with was the idea to basically try before you buy. So we wanted to toll mill some of our material through that mill to see what it performed like. We were thrilled that we delivered 94% recoveries. In fact, that's slightly better recoveries than we get at the Higginsville mill. Why do we get better recoveries there? It's because 100% of the feed goes through a gravity circuit at Lakewood, which is superior for material where you have some of that coarse gold that we get at Beta Hunt at the Lakewood mill. So that performed very, very well. And eventually, as we scale up Beta Hunt, we'll be sending 1 million tons per annum to Lakewood and the second million tons per annum down to Higginsville, with the remainder made up by Spargos and the Higginsville operations. So fantastic acquisition. Why did we do it? We did it because we were seeing, as with everybody else in the industry, tremendous risk increasing around the Higginsville mill expansion. So originally our mine plan, our growth plan, was to expand the Higginsville mill from 1.6 million tons per annum. Actually, originally it was 1.4. We already did a small expansion to 1.6, but 1.6 million tons per annum to 2.5 million tons per annum by the end of 2023. We had basically put that out for tender. We did our advanced engineering, which is complete, and we can store that work for a later date. But as with operations across the world, we saw 2 major risks. Number one was your input costs were increasing materially for long lead time purchase items, consumables. Structural steel has really gone up materially across the world, doesn't matter where you are. So input costs were increasing, so the capital number was increasing, but also schedule risk. And schedule risk is very, very real. The company that was going to be constructing this expansion for us was building 2 new mills elsewhere in Western Australia. Started to indicate to us basically that they weren't sure if they were going to be able to get the personnel onto our site to begin our project on time. And of course, time is money in this business. So we saw some schedule risk and some capital risk there. And late last year and earlier this year, really put our shoulders into looking at other mills, which is when we started reviewing Lakewood. And it's exactly what we wanted to purchase. Really happy to reach that transaction with the counterparty. And basically, what we've done is added that extra 1 million tons of capacity. Call it almost an entire year ahead of when we were originally going to have it. And also we obviously eliminate a lot of the technical risk associated which is always there with expanding that mill. So thrilled to have it. We're evaluating a whole range of opportunities for filling that mill. We've got some significant stockpiles ourselves that we're looking at processing through it. So really happy to have it, and welcome to the whole Lakewood team and joining us here at Karora. We're thrilled to have you and thrilled to bring this into the Karora portfolio. So great acquisition there. With respect to carbon neutrality, I mentioned at the beginning, we do take this very seriously at Karora with Invert, and it's something that we launched on in 2021. We will be advancing this in 2022. We're looking at a variety of emissions reduction strategies as well that we're going to be executing on over the future years. So we'll be updating the market on that a little bit later in the year, and of course, direct everyone to our inaugural ESG report, which is a big achievement for Karora and a big achievement in terms of us showing up on more investor screens. We released that earlier this year, and we'll be updating it early next year. So very important role in our company as we move forward. In terms of moving forward, we also have a strong track record which we're basing that progress on. So since we acquired the Higginsville Mill for $50 million Australian in mid-2019, what a glorious purchase price that was. Of course, gold was down around $1,400 an ounce at that point in time. Great acquisition and certainly a turning point and transformation for the company. Since then, we've delivered repeatedly on our quarterly production and in terms of reducing our all-in sustaining costs all the way through to the end of the 2021. Obviously, in the first quarter of 2022, like everybody else in the industry, we were impacted by COVID costs, inflationary impacts, particularly a tight labor market. So what we saw in the first quarter is about $300 an ounce in increased costs. Western Australia opened up for the first time in 627 days in the first quarter of 2022. While that obviously brought some employees back into the fold that were unable to cross that border with the heavy restrictions they had, it also brought with it Western Australia's first wave of COVID. So while we saw no hospitalizations and certainly no severe impacts on COVID on our employees, they did have to serve that isolation period, which led to lower workforce availability. You've seen that right across Western Australian producers in the first half of this year, and the first quarter was the biggest one for us. Happy to say that in the second quarter, we reported a 15% improvement in all-in sustaining costs in the second quarter over the first quarter. So costs are trending in the right direction as we get a handle on all of those impacts we dealt with in the first quarter. But also, and this is very, very important, we delivered a record production number in the second quarter, despite the challenges we're still going through. 30,652 ounces. That is a record since the acquisition of the Higginsville Mill. So a tip of the hat to everyone at the operations for delivering just an outstanding quarter here, obviously as we ramp into that growth plan over the coming years, but very well done. We continue to expect to attack costs. We did revise our guidance range for the second half of the year, which consequently impacted our 2022 guidance. And if you reverse engineer those numbers, you can see that costs are expected to improve over the second half of the year as originally stated, but obviously versus where we are in the second quarter as well. So ounces will be up and costs will be down. So great second quarter. Things are trending the right way in what is probably one of the toughest operating environments we've ever dealt with in the mining industry. So very well done to the group. Here is our 3-year guidance with that revised 2022 number. On an ounce basis, we actually improved our guidance. Originally, it was 110 to 135, and now we've squeezed it to the upper end of the range, 120 to 135. So that gives you an indication of how well we're tracking on a gold production basis so far this year. And then, of course, our all-sustaining cost numbers, we did increase those by about $150 an ounce US, and that was due to that first quarter impact predominantly. You've seen probably about 40% of producers across the world increase their guidance over the course of, 60%, 40%, 30% have maintained, and some have reduced, but not many. So in line with the rest of the sector, we continue to expect to attack costs over the second course of the year. 23 and 24 is when we scale into this growth plan. So a big component of that, I'm going to talk about it, is Beta Hunt, but also we have some of this new milling capacity. And then by 2024, we're expected to reach that annualized rate of 200,000 ounces a year at some pretty tremendous all-in sustaining cost numbers. So excited to deliver that to the market. With respect to the milestones for this growth plan, we've refreshed this versus our last deck here. We're going to be ramping up Beta Hunt. The second decline is going tremendously well. In fact, we're ahead of schedule. I'll talk about that in a few slides. We're also advancing the nickel studies. We just released the PEA, moving on to the next level of study and going to be aggressively moving the nickel forward, which has tremendous byproduct potential. And of course, continue to evaluate. We've got several other projects which we're not talking about yet with the market as we continue to evaluate them, but several levers we can pull to both increase output and lower costs. So lots going on across our site. Certainly no shortage of exciting things to work on. Stepping into Beta Hunt, which is our primary asset and really is the backbone of the company, and the anchor of our valuation here. Lots going on there. We've materially added to both gold and nickel resources. We've slashed royalties, which is really what opened up this asset for the first time in a very, very long time. And as I mentioned, made new discoveries previously. So there is our resource base in both gold and nickel. That nickel resource was updated in January of 2022, and that formed the basis of that initial PEA that we put out just a couple weeks ago here in August. We are expecting to expand that nickel resource. We're going to put out a new nickel resource and reserve here towards the end of the year as we update all of our resources and reserves. But we expect that nickel resource to continue to grow as we do with the gold and as we have with the gold over the past several years. So material resource base, but expect it to expand significantly. So for those of you new to the story, I'm going to go over this very briefly here, but Beta Hunt, long before it was a gold operation, was a nickel operation for the better part of 40 years. And as a result of that, there's over 400 kilometers of existing infrastructure in place underground. And at Karora, what we've done is we've really leverage that both for exploration and for mining. So number one, it allows us to mine that average grade of 2.6, 2.7 grams per ton. That is the average grade of the resource very profitably, but also it allows us to discover new zones. So in green here on this slide, this sort of lime green color, you see the Larkin Zone. I'll talk about that a bit later, but that is a brand new area which we discovered only about 18 months ago, or just over 18 months ago now, I should say, about 2 years ago. And brought that into the resource base. We also continue to expand these other areas. So we're leveraging that existing infrastructure. It is a huge advantage for us, and we will continue to do so moving forward. Expanding Beta Hunt to 2 million tons per annum involves the addition of a second decline. We're doing just north of 1 million tons per annum out of our current decline. In fact, we actually just recorded our first 100,000 tons per month. 110,000 ton month at Karora, which is a tremendous achievement by the operations. For some context here, when this asset was restarted in 2019, back in the RNC days, I was doing about 30,000 tons per month. So to triple your throughput out of a single decline shows the operational excellence of the crews there. There's a lot that goes into that in terms of productivity, equipment upgrades, training, and just improving the skill set of the operators. So great work by the team there. As we're able to move more tons, obviously your fixed cost base is reduced and you're able to increase your margin. That was a big reason why we drove those costs down for so long. So well done. What we're doing here is we're adding a second decline, which is replicating what we've already done so well, and it's proceeding very, very well. In fact, it's ahead of schedule. Originally, the second decline was scheduled for completion in mid-2023. We're now moving that ahead to the first quarter of 2023. So it's 67% complete, or 2/3 complete right now. We're attacking it with a crew from the surface who've completed the portal, and we're also attacking it with a crew from underground, and those two will meet in the middle. So very, very strong advance rates. It feels wonderful to say it in this current environment, but it's actually ahead of schedule and slightly under budget or on track with budget. But very well done to both of those groups for moving that forward. But what comes next? So next we will be advancing the additional ventilation. So we poured the vent pad already, and we're going to be kicking off some of the vent raise work that is critical for increased mining activity underground. So you're building a second decline, but you need to ventilate the mine additionally in order to get those production rates up. So the second decline is expected to be fully operational versus the decline itself being completed by mid next year. And the rate limiting step there is the ventilation. So progressing very well there. And that'll allow us to increase gold production, but also, as I'll talk about in a few slides, increase our nickel production as we get down into areas such as the Gamma Zone, where we have the potential for significant nickel byproduct credits. So good progress there. And once we get to 2 million tons per annum, we're hoping to exit next year at that 2 million ton per annum annualized rate. It'll really be off to the races here in terms of ounce production at Beta Hunt. With respect to additional targets for resource expansion, look, we've got a phenomenal resource and reserve. We expect to expand that again later this year as we update everyone on it. But we've just continually are adding these additional shear zones. Of particular note, we added that Larkin Zone, but we're drilling over in East Alpha. We've got the Mason and Cowsill, which we just put a press release out on yesterday, which was fantastic. We've got the Sorensen Zone, which is up close to surface. Obviously, extension of existing zones, and then Fletcher, which we've got probably about half a dozen holes into, but it looks like it could potentially be as significant as western flanks, and all of these are wide open at depth as well. So we're testing them at depth. So a lot going on in terms of gold ounce additions, and then of course nickel pound additions or ton additions at Beta Hunt. I do want to mention the Larkin Zone. For those of you that see me present before, we talk about this quite frequently. But we discovered that in September of 2020, and in just 18 months, we took it from initial discovery hole, which was on the slide that you saw there, right through to resource, which is about a 300,000 ounce resource added earlier this year. So phenomenal work, and a perfect example of us leveraging that existing infrastructure. Right on this slide right here, you see that kind of gray line or block going across it. That's an existing underground drift or tunnel. What we did was we channel sampled the walls, found 14 meters of 5 grams, knew we'd found another shear zone, drilled through the back or the roof of that area, found all that wonderful gold there. Also found a brand new nickel trough. The relationship between gold and nickel at Beta Hunt is very predictable. You basically have these gold vertical shear zones. Nickel sits right on top. They used to mine the nickel. They never knew about the gold. Now we mine the gold, and we're going to be mining the nickel there. So it's now extended over 1 kilometer in strike, 150 meters in vertical extent, open at depth, but a perfect example here of our ability, especially once we went back those royalties, to really give this asset the exploration it deserves, and all from established infrastructure, which is just a wonderful luxury that we have at Beta Hunt. With respect to other areas that we've been drilling off, I mentioned the Cowsill and Mason, which we press released on yesterday. Our 2 first holes returned. One was a fantastic intercept. Look, 13 meters of 6 grams. That's a wonderful economic intercept. And then over at Mason, we drilled 5 meters at 2.4, which is very consistent for what we're seeing in other areas at Beta Hunt. So again, building that resource inventory, adding ounces to the registry that extend your mine life, and of course you get valued on those. That increases the net asset value of your company and ultimately drives value going forward. So lots going on there on the gold front. Switching over to the nickel front. So, later, I believe it was in late 2020, early last year in 2021, we announced the discovery of the 50C, or the Gamma Zone, which is south of a fault called the Gamma Block at Beta Hunt. It's a fairly busy chart here, so I'll just try and draw on it for you right here. So this is the Gamma Fault at Beta Hunt there. And this zone right here is what we've discovered and drilled off over the course of the last year. So what we did was we drilled it off and over a 800 meter long strike extent, 120 meters wide, and if some phenomenal results with our initial nickel resource there down at Gamma, which significantly added to the existing resources that you see on the right hand side there at Beta Hunt. So this is an area, as I mentioned before, Beta Hunt was a nickel mining operation for close to 40 years, I should say. It produced 60,000 nickel tons. 33,000 of those came from the Beta Belt. This has all the hallmarks of potentially being another large nickel area. And of particular interest, and hopefully you can see this as I circle it, there's a historical drill hole which is located about 400 meters to the southwest of our existing resource that we have right now, that drilled 9.5 meters of 11.4%. So at Beta Hunt, as I mentioned before, we kind of have these continuous nickel, gold shear zones, and on top of them, we have these continuous nickel troughs. So that's a great potential validator of a strike extension of that nickel zone. And then we have another 2.6 kilometers, or I should say 2.6 kilometers in total, to get down to our property boundary. So significant potential for that nickel resource to grow and to add significant years of mine life beyond the initial 8-year mine life that was envisioned in the PEA that we put out. As I mentioned, it's 120 meters wide. And why is that significant? It provides a very large virgin mining area. By virgin, I mean a new mining area. What we've been doing historically at Beta Hunt is mining nickel remnant areas, which is higher cost. It's very manual. It's done with physical jacklegs. Once we can get into some more mechanized area, but also in virgin territory, it significantly lowers your nickel mining costs. What does that mean? It means increased nickel margins, which means stronger nickel byproduct credits, which ultimately drives more cash to the balance sheet. So very, very happy about how this zone is shaping out and just how big it's getting. This is the latest nickel mineral resource. And as I mentioned initially, we discovered it just earlier last year, all the way through to resource on the 50C in just over a year. Another example of how quickly we can drill these things off at Beta Hunt. We will be updating reserves in the fourth quarter of this year. And here are the highlights so all that resource, we talked about how big it is, how we believe we can expand it. But what about the PEA results? So ultimately, we are a gold company. We're going to have some phenomenal nickel byproduct credits. BHP is restarting the Kambalda facility just next door, wants to take all of our nickel. They signed a huge offtake agreement with Tesla. Tesla is very interested in green nickel. As we mentioned at the beginning of the conversation here, we're very focused on being a carbon neutral company, basically producing green products. So that green nickel is something that they absolutely want. Obviously, the grades are phenomenal too, just below 2%. So BHP is very happy to be a customer of ours. But ultimately, at that base case assumption, it's going to drive about 80 to 100 bucks an ounce in byproduct credits. So that's phenomenal. A couple other things I want to highlight here is the base case is done about $19,500 per ton US for nickel. Current spot prices are somewhere in the range of $23,000 per ton. We ran an upside case that's very close to street consensus. What do I mean by street consensus? When you basically pull all of the brokers, I believe we pulled about 27 of them, investment banks and metal price forecasters across Europe, the US and Canada, the average consensus price was over $25,000 per ton. So we ran a scenario there. When you look at the numbers at $25,000 per ton, and depending on what your view is macroeconomically of the nickel environment, with all this EV demand, I think everybody's in agreement. Producing more nickel is a good thing, and there's not nearly enough high quality, high grade nickel being produced in the world. That's why we're seeing such large investments into this space. So in an upside price environment, which is really we've been there before. We were there just in May of this year. We were at $27,000 per ton. Actually, look at the IRR. So you go from 105% to 232%. That is a unbelievable return on capital invested. And speaking about capital costs, we're only putting $18.7 million Australian over the life of mine. That's over eight years. Now, the first year investment is only $7 million Australian. So $7 million investment to drive those kind of byproduct credits with that kind of return. And in fact, if you increase that nickel price by 20%, the value of your project increases by 60%. I said this on another interview last week. You'd be hard pressed to find a nickel project in the world with those kind of metrics that have that kind of return profile and that kind of leverage for such a low capital investment. Again, we come back to the theme of leveraging that existing infrastructure at Beta Hunt for both gold and nickel, and the capital requirements being so low due to the fact that we have all that infrastructure in place. So phenomenal project. We are very excited to advance this. Going to be working aggressively on the next level of study over the course of this year. Obviously, that second decline is a key component of it. Additional ventilation so we can get mechanized mining down there, and hopefully we can basically have this thing spitting out a whole lot more nickel in 2024. But we're going to keep pushing it forward, and there's a huge differentiator for Karora shareholders. Obviously, we have nickel byproduct credits, so we're somewhat insulated to gold price movements, but also exposed to nickel price movements, which is phenomenal. So we're going to be getting that story out there more and more, just like we are today. But really happy to get that out into the market. And great work by our team internally. Lastly, on the nickel, we are drilling several other areas. We talked a lot about 50C in the Gamma Zone, but as you can see in the graphic on the left-hand side here, there's nickel everywhere, right? So there's 30C, there's 40C, there's a new area called 25C that's not even on here. We've got nickel above the A zone, we've got nickel above Western Flanks, and then of course the new area of Fletcher, there's potential there as well. So even though the Gamma Zone is just such a high grade, beautiful virgin mining area, we are going to be exploring for nickel all over the place, and we've got infrastructure going to most of these areas. So that's a huge advantage for us as well. So the nickel story will continue to go, and we'll continue to allocate dollars towards it. Stepping down to Higginsville, so obviously we have our mill there, the 1.6 million ton per annum Higginsville mill, which has been performing very, very well. But we also have an enormous property and lots of areas for us to explore, as well as some operations that we've been operating. So for those of you that have watched presentations before, you understand this sort of Higginsville Central and Greater resource split that we did. Central is kind of the higher grade core, let's call it, around the Higginsville mill. The Greater area brings in some of the larger exploration projects properties and areas that we'll continue to test. Earlier this year, due to the COVID restrictions, particularly on drillers and personnel availabilities, we didn't have much drilling happening on the exploration front in Higginsville due to personnel restraints. We're going to have more of those people stepping in the second half of the year and into next year. Beta Hunt has been the priority just due to the return, right? The dollars you invest there, you just get such a fast return on them in terms of being able to monetize them, mine it. It really is the value driver, but certainly wonderful exploration potential across the Higginsville property. Looking at the properties that are closest to the Higginsville mill, these are some of them. Right now, we're operating underground at Aquarius, which is a new mine we've started up. It's getting into some higher grade vertical veins, as well as the Two Boys restart, which is a past producing operation. So, if you think about where our future feed's going to come from, we've got 1 million tons per annum of capacity at Lakewood taken up by Beta Hunt. We've got the second 1 million ton of capacity taken up by Beta Hunt taken up by Higginsville. That gives you 500,000 to 600,000 tons of capacity that you need to source from elsewhere. Obviously, we've got some great stockpiles, but we've got Spargos and we've got this variety of Higginsville mills. So from a value basis, it still is Beta Hunt that's the driver, but we'll be looking for the best opportunities across our portfolio here to supplement that feed as well. With respect to exploration, this is one of the areas which is certainly very, very interesting for Karora. As I mentioned, we weren't able to get drills onto this earlier this year. Our priority was Beta Hunt with the personnel that was available. That situation is improving now. But the Sleuth Trend's a fantastic area. Between Balu, which was a mine we previously mined, and the Monsoon target, where S2 drilled 66 meters, 11 grams per ton. We did air core drilling there last year. We did geophysics earlier the year before. We did some RC drilling. Fantastic drilling results combined with geophysics. You got the Zaluka Shear, which is the major structure through the entire area, actually goes right through this area, which is phenomenal. So all stacking up to tell you that this is a very interesting area. So we're keen to get back into there and to do some more, let's say, grassroots and blue sky exploration there. But of course, anything we mine there won't be into the mill anytime soon. So our priority, of course, is turning, drill dollars into cash. So we'll continue to deploy most of our capital into the Beta Hunt exploration and nearer term opportunities at Higginsville, but this is a phenomenal area for us to continue to explore. With respect to Spargos, that is interesting to see how much the mine has evolved from that drone shot you have right there. It's a much deeper open pit mine now. Been in operation for a while. We put our first ore through the mill in the fourth quarter of 2021. It's going to be a mine that's going to perform well in the second half of this year as we get into some higher grade areas of Spargos. So we'll see that delivered over the course of the quarters. Very interesting underground potential at Spargos. We're evaluating that right now on what the economics look there and making capital decisions to go in there. But some phenomenal drilling results that can support that. So Spargos will be around for a while to come and part of that supplementing feed that we talked about into the Higginsville mill. With respect to where we're going, so this is a chart that I think is particularly relevant in terms of where the market values producers of different scales, obviously with different free cash flow profiles. So our goal here and our stated objective is to get to that 200,000 ounce a year mark by 2024. Excuse me. You can see on a market cap basis that potentially is over a doubling of our current market cap. Excuse me. And that is, broadly speaking, remained the case over the course of, let's call it the last 6 months of tumultuous trading. So, we were north of $1 billion company. A lot of the companies on this slide were well north of a $2 billion company. So, basically that kind of 2x return as we scale into this growth plan is something that we're certainly believers in, and the market is telling you is what they expect. So, happy and excited to execute on that and drive, additional market cap and per share value for our shareholders. Corporate summary right here. Obviously we've got a lot of analysts covering us, and the caliber of some of those groups, or all of those groups really, including some of the big banks, tells you the caliber of the story and the investors that we have. Some of those investors are listed in the top right. So high quality institutional shareholder base, very well cashed up. Obviously we financed the acquisition of the mill. We also refinanced our debt facility. I should mention that earlier this year. We had a $30 million outstanding amount on our Cortland facility. We refinanced that with Macquarie. Number one, that's a huge stamp of approval for a company like ourselves to have Macquarie behind us. Number two, we reduced the coupon rate, so we actually outlay less cash on an annual basis in order to maintain that facility. We also tucked in a $40 million revolving credit facility. Capital is cheapest when you don't need it, and confident in saying that if we went to refinance that right now, our interest rates would be significantly higher than when we did it. So our timing was excellent. And one of the key components is, hearing this from several shareholders in terms of, why wasn't this refinanced a year ago? Well, we visited all of the banks to refinance it a year ago, right when we announced our initial growth plan, and all of the facilities that were shown to us came with gold hedging. And just simply put, we had unwound a lot of hedges that were part of the Higginsville mill acquisition. So we were not willing to put gold hedges back in place. We want full exposure to upside in gold prices. I was an analyst for 7 years prior to working here at Karora, and there are few, if any, companies that are rewarded for hedging gold price. When you look smart when gold prices go down, but you get heavily penalized when they go up. And the reward versus the punishment on the downside is heavily skewed in the wrong direction. So we were offered facilities that had hedging in place. We said, no, thank you. Let us go ahead and continue to execute on our plan. We revisited those conversations earlier this year as the company had evolved, as we had more exciting projects. Obviously, the addition of the Lakewood Mill is a huge de-risker for this company, and that led to much more favorable debt terms. Look, our previous facility had a high coupon rate, but was very low on covenants, and we wanted something that was equally light. So we have a great facility with Macquarie right now. Happy to have it, and it's just it's fantastic to have that in place and puts another stamp of credibility. So I hope that answers some questions we've had on why it took longer than people expected to get it done. And that's simply put, the first facilities we were shown were not of the standard that we wanted, but now we have a great facility in place and happy to have that done. So that's great. Last thing I'll comment here is, we're all shareholders of Karora here. Obviously, it's been a tough retrace from 750. We were trading at about 1.1 times NAV when we were at 750. And for context, the average of the group at that point in time was 0.65 times NAV. So we were trading at a massive premium to the group on a valuation basis. That was fantastic. Obviously, when macroeconomic conditions changed earlier this year, we saw share prices roll over in every sector across the world. Gold was no exception. Simply put, we made shareholders a lot of money. A lot of the institutions have made significant capital with us, and so we were one of the first ones to be lightened up as they looked across their portfolio. Since then, calls with institutions have basically been focused on, how are you guys doing? How's your financial position? Okay, you guys are in great shape. Continue executing. There are other companies, as you all see left, right, and center in the market, that they are more worried about. So, we basically were a source of liquidity in order to offset losses elsewhere in their portfolio, and now we've retraced to basically the peer group average. We're trading around, call it that 0.45 to 0.5 times NAV, which is exactly where the peer group is. There's one or two exceptions to that that are trading slightly higher, but our next objective here is when that capital comes back into the sector and the gold trade is back on, we want to regain that premium multiple versus the group, and that's what we did before. We've only added fundamental value to the story since then, so we plan on executing in the same fashion going forward. So we have a few more minutes here. That's our resource base and some lovely looking gold that's actually in the Perth Mint from Beta Hunt. But I think at this point in time, what I'll do is I'll pop it over for some questions. I think we got about 7 or 8 minutes left here, and hopefully I can get through a few of them.
Yeah, absolutely. Thank you, Oliver. I'd like to remind everyone in the audience to keep asking questions in the Q&A. But Oliver, we've already received a number of questions. The first being if you could provide some more color on the recent Coarse gold discovery and how that might impact your third quarter.
Yeah, for sure. So just last week, in tandem with the announcement of Bevan, we also announced that we discovered some more Coarse gold. And I should say, rather than discovered, we'd actually mined it. So we have two ways of mining at Beta Hunt. One is in development drifts, so basically tunnels through where you take a round, you get to look at it, you take another round, you get to look at it, you take another round, you get to look at it, and visually you can inspect the ore. So the previous Father Day discovery and other gold discoveries, the Coarse gold discoveries we had have been done that way. This actually came in a stope. So what a stope is a large area that we basically blast and then mine out in bulk. We checked our muck pile, which is where you pile up the rock on surface, and inspected it and found that Coarse gold boulder that Rob Walker, our GM of Beta Hunt, took a wonderful photo with. So we do get that from time to time in stopes. We just don't always know because we don't always visually see it. So that was great to have. Obviously that's going to bolster ounce production this quarter. We haven't quantified it at this point in time because there could potentially be some more there. So we'll know as we move forward over the next several weeks what we have there. But we do know when we're in a zone where it is more likely that there is coarse gold. And another thing that is very, very important to emphasize here is that mining needs to be done in a way that manages geotechnical stress. At Beta Hunt, we're doing something called open stoping. And I'm not going to get too technical here for those of you that don't understand mining or don't have a history in mining, I should say. But basically, we are not backfilling or supporting our stopes at Beta Hunt. In order to manage stresses, for there not to be ground failure, which is a significant safety risk for people, you have to take your stopes in a specific sequence so that as you mine this one, the stresses around that area are redistributed into other areas that have rock in them or unmined area. So we follow a very specific pattern in order to make sure we mine in a very safe way. Our number one objective at Karora is to make sure that everyone goes home at night and there's nobody that can tell us anything different. We mine it in that specific pattern. We are now back into the area that was under the original Father's Day vein discovery because we have mined other areas that redistribute stresses from that open area over there. That is absolutely critical in bulk mining, especially when you have no support, which is what allows us to mine at such a low cost. Now we're stoping in that area, which is exciting, and we're very excited, and we think that there could be more coarse gold there, but we're in that area right now based on a mining sequence. You cannot just choose to mine here or mine there whenever you want, because number one, you put lives at risk, and number two, you sterilize other areas. What does sterilize mean? If I mine an area out of sequence and stresses go into that area when they're not supposed to be, I cannot mine that area anymore. That gold that is in that area remains there because it becomes too dangerous to mine it because the stresses have not been redistributed. So that is the geotechnical influence over mining, which is absolutely critical and is very important for investors to understand.
No, fair enough. Next question, what areas are priorities for exploration in the second half of the year? And when should investors expect to see more results from the Gamma Zone at Beta Hunt?
Yeah, for sure. So Gamma is absolutely one of our priorities. Very excited to get the drills turning down there. Our limit in the Gamma Zone is actually ventilation. So it's being basically a secondary ventilation that we have going there, which is why we cannot mine with big equipment or have a lot of people down there. So we'll be drilling that off over the course of the second half. So expect more results from there, and actually some interesting nickel results in some of the other areas around the mine that I talked about when I talked about the resource expansion. So lots there on the nickel. On the gold front, look, we continue to step out from these existing gold shears, which is great. We just discovered two new areas that we announced just yesterday in Mason and Cowsill. So no shortage of drilling coming out. I should mention we're spending $20 to $24 million over the next 3 years each year in exploration. That's heavily weighted to gold and to Beta Hunt, where we get the fastest return on investment. But we'll have lots of exploration results coming out over the second half of this year.
No, absolutely. Any possibility of extending the southern boundary of Gamma Zone with the possibility of extending the nickel deposit? Have there ever been drills for nickel at the same depth of Gamma Zone on directly adjacent property?
Yeah, that's a good question, actually. So we do have that historical hole that I talked about, which is a surface drill hole that hit the 9.5 meters of 11.4% nickel. That's about 400 meters beyond the current resource boundary, or in total, that would be 1.2 kilometers from the Gamma fault zone. Remember, we've Gamma fault 800 meters, then another 400 meters to get there. So good validation of a potential 400 meter strike extent. And then we own the property boundary all the way to 2.6 from the Gamma zone, all the way down there. So we're certainly going to drill test that entire area, as well as remember at Beta Hunt, we have these parallel gold shear zones, another parallel gold shear zone, and potentially nickel on top of all of them. So we can go laterally as well as along strike, but lots of areas to explore. And we're certainly going to leave no part of our property boundary, or I should say our tenements, undrilled by the time we're done here. So lots to work on.
Absolutely. Well, Oliver, listen, I want to thank you for coming on today. I know you've got a busy day ahead of you. I also want to thank everyone that's attended today, especially those who have asked questions. I know there are a lot of questions that have gone unanswered today. We'll be passing these questions along to the team at Karora 100% so that they can follow up later. Listen, today's recording is going to be available on 6.com in the coming days. And before we wrap up, finally, Oliver, I'd like to hand things back to you for just some closing remarks.
Yeah, for sure. So, apologies for the short time. We're a bit time constrained today, but happy to answer any other questions that you guys inbound, and we'll try to get as active as we can on these platforms. We've done a few of them over the last several weeks, so it's great to be back on Six and communicating more of the story to you. Lots of press releases to come. A great valuation point to be in the stock here. Like if you want gold exposure, I think this is a fantastic name. You've got self-funded growth. You've got free cash flow generation. You've got nickel byproducts. You've got a tier 1 jurisdiction. You've got a brand new COO that's coming in that has scale and experience at just a tremendous operation. So very exciting time for Karora. Look, we're all shareholders, as I mentioned. We're looking forward to returning to share prices of just a few months ago. And when the gold trade is back on and that capital is flowing back into the sector, I think this is a great place to be invested. So thank you for being investors. For those of you considering it, we hope you join the registry, and look forward to seeing you on the next Six presentation.